First thing is you realize that holding cash and dead assets is a bad thing. So a lot of money is in cash because people think that cash is the safest investment, but they are measuring that in amount of money that they get, nominal returns, and they say it doesn't wiggle much. But think about it. It's lost, as of the most recent statistics, 8.5% over the last, inflation is 8.5%, and they receive virtually no interest rate in cash. And so there was an 8.5% loss of buying power as a result of inflation. And so psychology should change and is in the process of changing to realize that you have to think in terms of buying power, not the number of dollars you have. And you have to think how much is your buying power. And so the worst thing is to be in cash. Like I say, cash is trash, and to be and to be out of the bonds. The next thing is to have a diversified portfolio of assets. The diversification means some assets that are inflation hedge prone. For example, you're better off to own an inflation index bond than a regular bond. I think the punchline is, if you take a look at it, it's simple. It's like a regular bond, except its payments are linked to the inflation, so they compensate you for inflation. I think it's one type of asset. Now, flooding into any one thing is an issue. But moving from the nominal bonds, in which the government just says, I'll give you this amount of money, and it has the unbelievable and unlimited ability to print the money it gives you, it would favor inflation index bonds. And it could be other assets. Some people would say something in terms of cryptocurrencies, or it might be those other assets. I think that too much people pay too much attention to one at the extreme of the other, that either somebody's all crypto, or they're all gold, or they're all something. And I believe that that's a challenge. I think that crypto, like gold, is not a productivity earning asset, and it can be controlled by governments in lots of ways. It's been outlawed in a number of places, and it also can be monitored. The privacy element is not secure from governments doing monitoring, and the size of crypto is about the size of Microsoft. It's all crypto combined. And so to be overly concentrated in it, in my opinion, is a mistake. But to have some of it is a good thing. So the question is always what amount of it. So that's I have a little bit about it. I'd probably shock you about how little I have. You would shock me about how much you have. But having some of it. So and other things I would say is that geographic location is important. In other words, not just all in U.S. and U.S. dollar assets. I would say that the three things that again I'm looking at if I go down countries is, first, are they earning more than they're spending? Do they have a good income statement and balance sheet? This is going to be very important in the period ahead, because the amount of credit that's going to be available to bridge the gap between spending and earning, cash flows and so on, is going to be quite narrower. So a lot of companies even that were able to raise cash and not have good cash flow because of maybe growth expectations in the future will find it more difficult. That'll be true for individuals. It'll be true for countries. So does it have a good income statement and balance sheet will be important. The second is places. How are they working with each other? Is there civility, or is there civil war, on the brink of civil war? Because countries where they work well together, they're productive, are going to have a real competitive advantage. Orderly places. There are parts in the United States that are better than other parts of the United States. For example, we just had the shooting in New York City on the subway, and New York City's becoming more dangerous. Chicago's becoming more dangerous. San Francisco's becoming more dangerous. You're seeing people leave some places for other places. You're seeing them leave, to Texas as Austin, or to Florida and so on. So people do leave, and they do that. Those who leave are higher income and higher taxpayers. And as a result, there's more of a hollowing out that takes place in that, which creates an economic problem as well as a lifestyle problem. So I think you're going to see greater differentiation in places, which affects where you want to be and where people who can afford to be there want to be, and also affects what their economies and markets are like. And then the United States. And the third element is, are they financially strong? In other words, income more than expenses and good balance sheet. Are they civil with each other? So they're working together rather than hurting each other. And number three is, are they in a position where they're likely to be in a war, or are they likely to be out of a war? You don't want to be in a war. So, and those places, investing wise, history has shown, do worse because they have to spend more money. There's more problems, more pain that's being exchanged. Neutral countries in wars do very well, as it turns out. So elements of diversification. So it's a long-winded answer to your question, but I would not want to be in debt or cash and those instruments. I would want to diversify well with a bias toward inflation-protected assets. And I would want to diversify between locations, countries, in terms of the investment based on the criteria I've just mentioned. I think that you have to understand what a good strategic asset allocation mix is. That is, how to create a good, well-diversified portfolio, assuming that you don't know how to make these buy and sell decisions. Because what happens is, think of it, it's like a poker game, and you're playing against others. And those others are putting in, most lose, most buy at the highs and sell at the lows. Most behave emotionally. Most don't have the same information. So it's a very difficult game. Like I say, you wouldn't think I'm going to go try to compete in the Olympics, but more people think that they can compete in the markets. I think the markets are going to go up or down. And the track records there are terrible for most people, okay, because of those handicaps relative to others. So for that reason, you start off with a well-diversified, balanced portfolio, because diversification can reduce your risk without reducing your return. If you understand how to get equally attractive investments that are not correlated with each other, that diversify each other, you can build a diversified portfolio. It would take too long for me to explain, how to do that right now, but that becomes the headline. And I described it in my book, Principles for Life and Work. Also, Tony Robbins described it, and he asked me about it, and then described it in his book, and he describes it pretty well. And for I direct you there. You can start off with, and I think this is most important, what's your strategic asset allocation mix? And then it's like going to the poker table. And then you say, what is my angle? Where's my where do I get to take money away from others because I'm better at it, okay? But everybody should start with a balanced portfolio, okay? Most everybody, they have careers to do, and I think they're arrogant. They think they can go in there and they can take money away. Maybe some can, but if you're gonna play that game, the first thing is also test your decision rules. Don't just go in and then you say, I'm going to wing it and do it. And because you won't even have enough sample size in your decision rules to know whether you're good at it or bad at it. What? After the first 5 times, you're going to pronounce how you are. It's a learning experience, just like any other learning experience, to develop your expertise. What I find is really important is to take my decision rules and test how they would have performed in the past to at least give me some perspective of what I might expect in the future. But you have to think through a game plan and operate that way. So I, by and large, would say, first, the most important things you could do are actually the simplest thing you could do. To build that strategic asset allocation mix, not to be out in there day trading your life's fortune away. What's necessary is you have to earn more than you spend as a society. And so we look at our country as a whole. And so you have to get financially sound. And that opportunity has got to be as much equal opportunity across the population. Because if it is for the averages may be very misleading. And if most people are not benefiting or have that opportunity, it is something that is suboptimal for the development of the country because you don't know where the talent comes from. But I'm just saying, okay, what you have to do is two basic things. You've got to be financially strong. So you have to be productive so that your income is greater than your expenditures. And you've got to be good with each other. You work well together. You're not destructive with each other. If you do those two things, like you're good with each other, and so you're productive and you're financially sound, you've got to do those things. Now, under those things, there are a number of things. You have to educate your population well. They have to learn how to be civil with each other. You have to provide a system that allows productivity to be good, blah, blah, blah. Because that's what I need to do. You need to create a system that both increases the size of the pie and divides it well, okay? And most importantly, divides opportunity well, not just the output well, but opportunity, but also the wealth well. So you have to increase the size of the pie and divide it well. And the way that I would do that is I would start by having a bipartisan cabinet and bring together smart moderates, people who can work on both sides. Because I think that the first thing is that the polarity is going to kill us. I think we're going to fight before we're going to resolve smartly what we should do. So I would want to have a bipartisan cabinet, and I would also want to have a program that's like a Manhattan Project, in which I take the smartest from both sides and work to engineer a program that is like that, so that when they come out with the program, there's the moderate left and the moderate right, in a sense, who are agreeing, because we each have our own ways of doing this thing, but what we'll do is we'll kill each other over which exact way we do it. And I think that to have a common bipartisan program that is raising productivity and redistributes opportunity and wealth well is the most fundamentally important thing. So I would have that bipartisan cabinet, and then I would have those moderates have to deal with the extremists on their party, because I believe that more than likely it's going to be the extremists who are going to destroy the system, threaten the system, because they won't be able to compromise. The fight will be so bad, and the answers do not lie in the extremism.